Good morning. It is Friday, 23rd of August, just after 8 UTC. So, before London's open. Actually, no, London's just about to open up. In any case, just looking at the local stuff from Bitcoin, going through some of the levels, we are making some very local lower highs and lower lows, which we'll go through. The big thing here is that this structure is allowing shorts to still build and stack above. We still are looking for that potential squeeze the outside. However, the macro resistance of where we're at now, especially after making that lower high in about 61.4, that's still holding us down. So we want to see clear gains of level above this structure, above where we've gone to. It is promising that we broke out yesterday. However, we are making some new lower lows, putting in, on closes for 1 hour, 4 hour, and even I guess 15-minute here closes. Uh, but technically, if you look at like the wick structure, fine. But the one thing that has been concerned is the really heavy liquidity building much lower, 58.3, 58.7, clearing this low. And that starts to become very problematic if we do start breaking down on the localized structure. If you look a bit higher time frame as well, just in general, where we've gone in this range, we're about 2 weeks or just slightly over 2 weeks into this range since we popped up on the 9th. So that heavy short liquidity is still very much above us. We still can easily pop into this stuff before we get into a liquidity dead zone around 65K. Very little chance of us breaking through that in one candle. Likely to see some kind of like bigger retracement and kind of retest the structure. Same thing to the downside. If there is the local sweep, the local losses, if we start creating new lows, especially under 58, 58.3, getting under these levels here, 58.5, then there is some liquidity that takes us right down to the bottom of the local range here. So keep that in mind. We are still trending up. From the lows that we put in on the 15th, we're still trending to the upside. However, it starts becoming very problematic if we start losing levels and breaking lower, even from the local higher lows, as that would then look for the target of the range lows again. We don't want to lose this range low. Obviously, if we break this, I think 52K, 51K is back on the menu pretty easily. I think that would be the macro retracement. And that becomes also higher time frame problematic, as this would then be a lower high compared to the previous high. So we're in that kind of like decision mode here. And one thing that really stands out going into the market open today is about half an hour after the market opens, Federal Chair Powell is speaking at Jackson Hole, which I think is Montana, I think. And we also have data coming out on new home sales. So could be a catalyst for some major changes. I think we're likely to break out of this range. It's getting overdue. We've built up enough liquidity back in the market as well. So next week, also big things all day. We have Monday as a banking holiday in the UK. Keep that in mind. So you're gonna have lower liquidity starting off early UTC hours. Going into the New York Open, at least, there's gonna be some pretty decent data points. I think the biggest ones, consumer confidence is one on Tuesday, but the big stuff starts happening Thursday, Friday. Core PCE, GDP, jobless claims, all this stuff is coming Thursday, Friday next week, and that's when we're starting to expect some bigger volatility movements. Also, getting into September, the week after that, we're closing in on the FOMC interest rate decision, and historically, you know, if we think about it, last cycle when they did start cutting interest rates, or the last time they did that, I think, gosh, it must have been '08. Uh, Similar time frame, similar market structure, and it's a little bit sketchy actually, because there was a nice big rally in the markets before everything started nuking, and then we went into a pretty hefty recession. So hopefully that's not the case. Looking over at Trading Light, look at some kind of advanced data here. Shout out to my buddy I am Zeus from the MDX Algo Discord for showing me the footprint clusters imbalances, actually. So that's actually really cool. So we can see the localized imbalances. It seems to have a really high hit rate on the 1 hour. So localized imbalance is still in place. If you start breaking down, retesting the lows around 60K, 60.1 isn't that much of an issue. We've also got some good open interest building in this kind of move up, which means that, the delta is very much more in the bullish side, which is already underwater from the local stuff, which has been bearishly retested. So I think the squeeze, the upside, still possible, still likely. However, if we start creating new lows under the lows that we created here, especially since the 1 hour and 4 hour closes from late last night, they closed underneath what we did yesterday morning. So that's pretty significant. We're technically making lower highs and lower lows on closes. And a higher time frame does look like we want to come back to sweep into that local structure. We just can't lose those lows that we already put in. However, for the time being, I wouldn't worry about it too much. 62K is also stacking very heavy resistance. So we've got a couple thousand Bitcoin between here and there layered in as shorts in that structure comparatively for the same amount to the downs below us. You'd have to go to somewhere like 59.7 before you start getting into the same amount of market depth. So market depth to the upside is much thicker at the moment. However, there's still a lot of liquidity and liquidations in these levels as well. So I still like it for potential continuation. Just watch for some really localized breakdown. And then obviously, if we start sweeping these lows, losing 60K, we want to start targeting lower into the structure. Looking over at the TPO, still gaining and still going higher, looking great. Like I said, once we start breaking these lows, we lose the local TPO, start losing, 60.1K. We're losing kind of the volume to the upside, and stuff around, 59.3, 59.5 becomes more attractive again, potentially all the way back to the lows at 58.5. But again, this is the low that matters. Losing the low that we put in on the 20th, that is the problematic loss that starts failing the local trend up. Going over the game plan on trading view. So just showing the liquidation levels, 50x, 100x. We got a nice heavy pocket of high leverage longs that are not getting tagged here. 100x and 50x is coming in as well. If I just turn on the local zones to explain them. So this is a high leverage liquidity pocket based off of the local structure. This would be a great place for a retest. And obviously there's a dead zone underneath that. So not a whole lot of like resting areas. I would expect if we wick that really hard and actually hold this low, then we actually have a continuation move back up to test. It's if we start clearing the lows here at 58.7, then we start breaking structure and we want to go back down to 57.5 and potentially lower into the structure. So going over to the general chart for our levels, I'll go back to the 1 hour. So yeah, this is kind of the game plan. We're still looking at a potential failure. You're at resistance. Remember that. That's the key in this area is like, okay, we're still at resistance. However, we are stacking liquidity to the upside with some heavier stuff below us. The big inflection point in my mind isn't so much the previous weekly open. However, it's still valid and relevant. It's holding 58.7, especially on close. We don't want to close underneath that structure. If we do have a move back down, which is, this here, moving back to the downside, I think that's still potential and still likely. The problem that I have with the most part of this structure is if we actually break this low, then we start talking about retest failing and then breaking back down to the lows here. So that's a nice step off move potential if we get a bounce and then we get an expansion back up. That's the big thing here as far as driving the trend. We are still technically making higher lows and higher highs in this kind of uptrending structure. I would expect that to hold for the time being until proven otherwise. So what we're playing out right now is that we're basically going to a level and we're squeezing, into the level to potentially pop out of it. And I think that's still likely as we're allowing the local short liquidity to stack. And there is quite a bit above us. So this is the range high, treated as such. Shorts are technically valid from this area. I've got a bit of one just in case we have a breakdown, but the longs are still the play because of where we are in the localized range. The trend structure not to lose is 58.7K. And the inflection, which is also the inflection point. Any loss in bearish retest is obviously down to 57. And any loss of 57K, you're going to 55K and then probably going all the way back down to like 52K, 51K. That would be like the major higher time frame retest. And again, it becomes problematic when we think about what we're doing on the higher time frame market structure. So for the time being, you're at the range high, treated as such. You're at resistance. If you still got some longs, it's still a great place to take a little bit of profit in case there's a squeeze back to the outside to the top of the range. However, I'm waiting for the range gain to give us some better direction. Any loss of the local priority structure, the local priority up, that comes with not just a loss of 58.7, you can even technically say losing 60.1. I think that's a valid thing to look at as well. So if you do even locally start losing the daily open, creating another new low here, that would be the first kind of sign on a lower time frame. So you still want that upside priority, which we still have. I wouldn't, again, say anything other than we are still in the range, and upside is still likely until we start breaking down on the higher time frame. Just remember, your actions should be based off of like what's happening in the market structure. I would say set alerts at some key levels. Set alert at 60.3 the daily open in case you get a move back down, and if it breaks it, potentially for the downside. However, until we start losing the macro higher low, we are still looking for upside continuation. And from that, yep, another level I put is at 61.5. That's basically your pump alert in case we actually start breaking above. And then obviously down here at 58.3. So those three levels, 58.3, 60.3, and 61.5 are the three levels I'd probably set as alerts and act accordingly when you get to those levels. So until then, hopefully we get the squeeze the upside and catch you guys on Monday. Peace.